Hi, I'm Victor Cantore. I'm the president and CEO of Amex Exploration. Very exciting project. We're right in the heart of the Abitibi Greenstone Belt. We're right off the side of the road of the town of Normetal. We've currently drilled in excess of 450,000 meters. A lot of high-grade results that we've had in the past. We continue drilling, and we're hoping to continue to deliver more high-grade results, and a resource is definitely on its way.
Thanks, Victor. My name is Ian Stalker. Slightly different project style. We have a project in Liberia and in West Africa, not to be confused with the bulk of West Africa. Very calm and peaceful part of the world. We already have 4 million ounces, of which 3 million is in the measured and indicated reserve category. We have completed a DFS. And of course, in this gold environment we find ourselves in, the DFS has become significantly more attractive and attracting attention from a range of players across the spectrum.
Fantastic, guys. I love to see you, Victor and Ian. Thanks for joining us. We're missing young Peter from Erdene Exploration, but we will catch him another day. Okay, so we're in Quebec. We're in West Africa, Liberia specifically, and you are both good examples of both where you sit. And I'm interested in seeing how behavior changes, how decisions change in a high-priced gold environment. We've seen it as high as 2,400 recently, settled down just below 2,300 at the moment. Everyone's excited. Investors are excited about the frothy potential of what may be. Victor, do you change your plans?
No, we continue moving ahead. It's really a high-grade project. What would change with the gold price is really the economics. When I saw the price of gold moving up, what I did is I went to look at when did I get involved in this project? Got involved in this project in late 2016. Gold was sitting barely at $1,200 an ounce. So we're looking at gold being over $1,000 an ounce, higher than what it is. What's amazing with that is for all the exploration companies, especially the ones that already have ounces, is these ounces in the ground right now are worth a lot more. What we used to measure with before, those numbers those numbers got to go much higher than we gauge these companies today.
I would add to Victor's comments there. What I've noticed, and I think most people will have, is an increasing activity in the MA space. There's certainly more action in some of the junior companies. Is that
an investor?
Listen to your advice.
Is that money? Take the call.
That's the share price going up, isn't it, Victor? So no,
right.
We're seeing more activity in the merger and acquisition space. Quite a few slow to medium-sized companies are getting attention. And there's a feeling, I think, amongst a lot of the guys who are acquiring that they better get moving fairly quickly, because you're 100% right, Victor. This gold price has changed the value of the ounce in the ground and the value to the investor when you put a project together. And it's always harder to build your first project than it is to build your second one. So it's keen to get it going.
Right, but in your case, Ian, with the DFS, as you say, the economics changed significantly. But is there a bit of you who says, well, actually, maybe we may need another look at this, because maybe the cutoff can change, maybe the engineering can change? Is there a bit of you that says that, or is it just like we're only sort of 2 months into this and everyone calm down?
Nothing is ever finished. As soon as you complete a DFS and you appoint a general manager, he spends most of the first 6 months telling you what an idiot you've been and you should have done this and you should have done that, because real life sometimes isn't quite what a DFS is. So constantly we've actually gone back to our engineering group, which happens to be DRA out of South Africa, an international group, and we've said exactly that. Let's relook at some of the metallurgical recoveries that we have achieved. Let's relook at some of the input costs, because when we did our study, COVID was still up and about, and not only COVID, but the Ukraine-Russian conflict was much more novel. We've always become blasé to some of these things now. But in reality, we were suffering as a consequence for gas pricing, and gas is our supply of electricity across the fence. So all these things need to be constantly reviewed and re-understood, and you'll always find ways and means. So there's always threats, but there's always opportunities as well.
Right. Okay. So, Victor, if I look at you, you're saying, well, actually, not much changes. We'll stick with the plan. We're finding high-grade ounces. We're consolidating land package. I mean, the end game for you, just if you don't mind sort of expanding on that, it is what? And therefore, in terms of if you're not going to change, what's changed about the people looking into your project?
The economics. The economics is going to be, with gold at 1,800 or 2,200, it's, when you look at that on a percentage basis, it just makes the economics a lot stronger and a lot better. Being in a good area, like here when we talk electricity, Quebec has a lot of hydroelectricity. Well, our project would be hydroelectricity. So you just keep on drilling and building up the ounces. We will put out an economic study. Unfortunately, I can't put one out side by side with the resource, but we will put that out as quickly as possible after that. With gold going up, it'll just make the economics look better. And as Ian was saying, all the producers, whether it be mid tiers, the larger ones, are all looking for ounces. If you look at some of the latest ones, you look at Great Bear when they got bought out at $200 and something per ounce. Lamac back in, I forgot which year it was, same thing. They got bought out for a little over $200 an ounce. High grade ounces are selling in that range, and most likely in today's environment, probably even higher. When you look at the profitability, I mean, it's and that's for all projects.
Yeah, no, it's definitely for all projects, and I think everyone recognizes that producers are they're almost like free cash for them. This incremental gain we've seen in the last few months, but they've got to be seen to do something with it. So, your shareholders, some of whom will be like, well, just hold off. There's more value to be created. There's a bigger prize further down the line, and some might be like, hey, you're never quite sure when these days will come again. Cash in now. How do you and the board sort of treat this sort of balancing act between this kind of increased interest in an early stage project like yourself, in that you are drilling, there's no resource, there's no economics on this thing, it's just we're seeing lots of high grade headlines?
So you just keep going with our, the game plan that we had is drill as much as you can, put out a resource. When you put out the resource, it's like, I'll say it, it's the first sizable resource that we're going to have. And from there, you continue building. You'll have to show that there's blue sky, making new discoveries, continuing, growing it. I don't think there's much you can change on a business plan or as a business model. You just, the ounces, you increase your ounces in the ground, make sure that it's economic. And in this case, obviously I can't pronounce myself, but it's pretty obvious that it will be economic here. I'm forward looking here, but it's that's all you can do to the shareholders is bring it and make it very, very, very positive, very positive for them. The majors will tell you just keep on drilling, but definitely put out a resource at some point with an economic study beside it.
Right. Okay. Now, in some parts of the world, in fact, I always talk to people about jurisdictional risk, and you were keen to let people know that Liberia is very different from some parts of West Africa, a much calmer environment. I can validate that. Being there, worked there. I think. Do you think you'll see the interest from the equities market? Do you think you'll see the interest from funders? Do you think you can see the interest from institutional, even when you kind of get to where you want to be in terms of FID, Ian, or are you kind of getting a West Africa discount at the moment?
Look, we are getting a West African discount at the moment because most investors don't really grasp the geographical location of Liberia vis-a-vis Mali or Burkina Faso, nor do they grasp, and it's hard for them to do so, the sort of internal politics in these types of countries, the geopolitics that have an impact. So we do get a discount. But, referring back to what Victor was saying as well, for every $600, let's say we did the definitive feasibility study at a $1,650, let me call it $1,700 an ounce. That means there's $600 for every ounce you're making now, extra free cash flow. If you're making 200,000 ounces a year, then, even my arithmetic tells me that's a shitload of money, quite frankly. That's extra. So we're in good shape. So you can see why the attraction is there at the moment, and you have to take the opportunity while it arises, strike while the iron's hot. And that's why we're busy. And you also have to take a decision in the junior market space. Do you want to be an operator? And not every company wants to be an operator. We can operate, but you can tell from the vintage signs and associated with my visage at the moment that perhaps my operating days have come and gone. I was in West Africa for 12 years with Ghana, Chief Operating Officer of Ashanti Goldfields. So that time has come and gone. So now is the time to say, look, guys, these bigger companies, they need to increase their inventory. They need to refill. They need to repackage. You've got several companies in West Africa. Endeavour's an obvious one you can talk to that have been consolidating and continue to consolidate. But there's a few others over there that are doing the same type of approach, because Africa has its challenges, but it's also got its opportunities. And you do get things moving in Africa, one way or the other, if you're determined to do it. So, look, but I would also make the point, and I think Victor's right, we're exploring as well. You've just got to be careful. It's that trade-off that you can just spend a lot of money exploring, and you're dependent upon the results. When you get enough, do your study, as Victor's suggesting, that's what we did. But if there's a chance of higher grade material, well, that gets exciting. It always gets exciting. The higher the grade, the better it is. But then you tie that off to hardness of rock, stripping ratio, weather conditions, etc., etc. So there's always a trade-off, and that's why you do studies, to understand the pluses and minuses. But no, we are very keen now to move our project on to the next phase, and that's somebody's going to build it. It really is. It's a project to be built.
Yeah, it's good news. My accountant just texted me, 200,000 ounces with that incremental cash is known as a shit ton. So, yeah, that's good. Yeah, just confirming that. Yeah. It's kind of interesting to me, the M&A stuff. I mean, just talking about M&A at the moment, we're seeing sort of Perseus come in and pick up OreCorp over in Tanzania. And, their view is Africa's a great place to do money. Great place to do money was a great place. Great place to do mining, because you can make money. Your gold price is set every minute of every day, so you know where you're at, wherever it comes out of the ground, as long as you can get it to market. I just think I'm so also conscious of some of the M&A I've seen elsewhere, Karora and Westgold in Australia, and also Silvercorp going to Ecuador, de-risking it and going to Ecuador, right? So that's quite a brave move. But I guess there are no easy jurisdictions anymore for miners. Victor, for you've got to your project has got to be a de-risk situation for most mid-tiers or majors coming in and looking at big projects. That must work on your side. Are there any downsides to Quebec?
There's no downsides to Quebec right now. I mean, it's and especially where we're located. So you had the former Normetal mine, which is within 4 kilometers of us. There's a rehabilitated tailings pond there. So there's living proof of what happens after a mine has been mined out. It's completely been rehabilitated from satellite. You can look into it, or from a drone, you can look at it, and it's all green. It's all been properly rehabilitated. There is a mining law. There's the difference when you're in a good jurisdiction. At least you have the rules ahead of time. Follow the rules, and things will go. Things should go very well. Being in the Abitibi Greenstone Belt, where we've been fortunate enough to find the high grade gold in the Abitibi Greenstone Belt. I mean, that belt has produced, if I'm wrong with my numbers, I don't know, but I think it's produced well over 200 million ounces until now. We've been fortunate that we actually found a high grade mine that will potentially have millions of ounces of resource over time. So jurisdiction wise, I think it's great being also, right on the side of the road of the town of Normetal. So we can drive up there from Montreal or Toronto. We'd be there 7.5 hours, 8 hours. You have an airport beside it. So it works out well. And that's for Amex. For any other company out there, I mean, as long as you're in a good country, good jurisdiction, I mean, Africa is well endowed with gold. I mean, it's if you're in a good place like Liberia, I mean, that's great.
Yeah, and just sticking with you, Victor, if you don't mind, is you're seemingly quite measured about this kind of the gold price moving, right? It's exciting. It went to 2,400, 23, reset at just above 23, now slightly below 23. What's your advice to investors out there who maybe, I say, getting a little bit excited about what could be? Because it seems to us that the money's going to take a while to kind of trickle down to exploration. You're not changing your course as a result. what's your advice to investors looking in here? Do they just stick with the usual fundamental driven investment strategy, or is there going to be an uptick?
I mean, the course to follow, I think whatever course like here gold bugs have been following, I think finally, I think we're really getting, it's going in the right direction, gold. I think I would continue to follow what we're doing right now. It's, I think the gold equities are they should outperform the market. I don't see, without getting into the deep economics about it, I don't see how gold will actually go down. Gold will go up. Gold will definitely go up in my mind, in my view, with all the disclaimers with it. I do believe gold will go up. So if you continue following the path of investing in miners, developers, good explorers, I think you should end up with pretty good returns.
Right. And Ian, and from I've spoken to you a few times. You're very good at telling the story of your project. Again, what's your advice for investors looking into the gold market more broadly, and then obviously your own project? What would you encourage them to look at? What's important, what's not?
Like Victor, I don't have a crystal ball, so whatever I say is just my opinion at this moment in time. But in reality, I do believe the gold market is strong and will continue to be strong. But there are always clouds around, and therefore be aware of that. If you're going to take a risk from an investment point of view, then choose a company that's been there, done that. Choose a company that's in a country that's doable. I've been lucky enough to be involved in now 12 mines that I've built. 10 of them I was the GM or Chief Operating Officer or the CEO of worldwide, and they all had different challenges, every one of them. I like to think because of my Scottish accent, I kept all of them on budget, of course. But you've just got to choose. It's not just the horse you're backing, it's the jockey as well.
That's correct.
That's the truth of it.
Yeah, I totally agree with that. The jockey is the jockey most of the time is more important than the project itself. I agree.
Yeah, absolutely. And but I think Sean Reason, we spoke to earlier this week, also commented, no one's won a race on a donkey either. So good management is important, but the asset must stand up, and the fundamentals of the asset must stand up.
The resource is key. The resource is key. You've got to get that right.
Absolutely.
You've got to get that right.
Yeah. Right. Okay. So, I mean, none of you have a view on sort of when perhaps equities will be the beneficiaries of, one, the Fed holding rate rise again, which is good, or indeed, what effect the gold price is going to have over and above the kind of immediate M&A that we're seeing. In terms of, perhaps how people treat their own portfolio. I mean, how are you treating your own investment portfolios? Is it just hold steady for now, or are you kind of contrarian because you think there are deals to be done based on where gold seems to be moving to?
Well, let me start on that one, because I've been involved in a range of different commodities and been pretty successful in some of them. And for example, I like uranium right now, but that's no great surprise because we did exceptionally well in uranium in the first decade of this century. But gold, yeah, I've got gold. I've got gold both at the senior level, mid-tier level, and the junior level. I think there's movement to go. We've been late in the junior level. We've been held back for goodness knows why. I'm not that clever to understand it all, but the majors have got a bigger boost, get better value, and so do the mid-tier. But the junior developers and the explorers, it's been hard for us. So there's more upside in that. And you're from a portfolio point of view and from an individual perspective point of view, do you want a 10-bagger, a 4-bagger, or a 2-bagger, or do you want your 10% growth? And you choose your business associated with that kind of thinking. And everyone's got a different view on it. But I do like uranium and I do like copper. I think they've both got some legs on them. And I do like gold.
Yeah, no, I totally agree. And I like your comment of before, exactly. You don't want to run, you want a good jockey, but you still want a good horse also. You don't want to be running the race with the donkey, that's for sure.
Three-legged donkey, yeah.
Exactly. So, like even us with Amex, with our executive chairman, this is his third mine that he's found. Like, I mean, this will be a mine. It's not a mine. I guess I can't call it a mine yet, but it will be a mine. The last one was the Shahuindo mine in Peru, and that's incredible. That's they got a pretty good resource there. They're producing very well. Yeah, exactly. I mean, I still think that I'm top heavy on. Even if I exclude my position that I have in Amex, I'm really top heavy on in precious metals and gold, specifically gold, and I go across the table, right? And you want to have explorers, you want to have developers, you want to have mid tiers, and you want to have the majors. I mean, the majors is like, it's basically your anchor positions that you need there to hold on to the portfolio. They go up first, and they also go down last in the event where gold would not do well, they'll almost hold the portfolio. And exactly, it comes to that. What do you want? Are you looking for a 5-bagger, 10-bagger, 20-bagger? It really comes down to that. So if you put together a good mixed portfolio where you could blend all that in, I think you should come out with pretty good returns.
Right. And in terms of another word that's used a lot, certainly of recent times, has been patience, in terms of the need for patience in investing. So even if you are interested in leaning into gold at the moment, Victor, you suggested that it's perhaps still got a long ways to run. So as an investment strategy, long-term believer in it, clearly long-term holder.
Oh, I'm a long-term holder, and this is not like, look, I know this goes out public, so this is not investment advice. This is me. It's for my own portfolio. I don't expect anybody to do anything that I'm doing. Yeah, I do believe it's going to be good long-term. If you're in good projects, if you have good projects and you're backing good management, I think it'll do very well. Like I think you'll out. I mean, if we're looking at portfolios, yes, at some point things will shift, interest rates shift, and all that. But I mean, at this point, if I'm really looking at gold, I think gold will outperform. I think it already has, and it'll continue to outperform. And not just gold and precious metals will continue to outperform, at least over the next 12 to 18 months. There's a lot of black clouds out there where people will be running to gold, including rates will have to come down at some point. Well, unless we get into stagflation, rates will have to come down. And with all the turmoil that's going on in the world, I mean, it's going to be a safe. Everybody's going to be running to gold as a safe haven.
Well, the good news is the Fed say they can't see the word stag or inflation anywhere in their announcements. So that's good news. Ian, it's just a different one. I'm just trying to cover a few bases here for investors looking in, and perhaps maybe learning about how to look at investment categories, etc. For someone like you who's kind of at that DFS stage, you're starting to not just trying to look at, well, how do I get this thing funded? But you're starting to look at, in terms of builds presumably, or even, acquisitors. But you're also probably needing to talk to institutional money. Generalists, are they back in the game? Has this recent move made a difference for them? They've been away for a while. What's it going to take to bring more of them back in? We need more money.
Well, let me start by a different answer, because I was really impressed with Victor saying he's a long-term holder. And I look at the youthfulness of that gentleman, and I can see why. And I think of my own situation, long-term holding doesn't really come into it. I don't really have that much long-term to go. So I'm much more short-term to medium-term. But back onto your question, no, and honestly, Matthew, I cannot say I've yet seen the market change in terms of investment sentiment from the likes of institutions. You can get individual guys coming in the UK, the Barmy Army, as you know it's called. They come in great volumes and move in great volumes, but it's really not what juniors want. They want to get an institution or two in, a holder who will keep it and go with you through the paces. But no, I haven't seen that yet. The generalists, they're there, they come in for this, that, and the next thing, but it's a weird spectrum. I was speaking to BMO just a few weeks ago, and they reckon that their books that they have been filling on various equities, only about 20% of them of the equity they're finding is coming from traditional homes. The rest is coming from all sorts of different places. So I haven't seen it yet, Matthew.
Right. But the sector as a whole, it's kind of got this kind of perception of, value destruction, right? And I think, with ESG and all those sort of things, people have said, well, you guys need to be held to a higher standard, etc. What's it going to take for a younger generation to come into this space? What's it going to take for money from I'm pretty sure we're a small market, but what's it going to take for this other institutional money to come in? Do we need to behave differently, or do we just need a good old-fashioned metals super cycle to sort it all out? What do you reckon, Ian?
Look, I think that's an excellent question, and I think the industry has to constantly look at these types of approaches and say, what do we have to do different? ESG is both good and bad, of course, for juniors because it's more work to do and you don't have that workforce. You've got a limited budget, but you recognize it's an essential. None of us ever set out to develop a bad project, ever. Not that I'm aware of anyway. But sometimes your standards are different for 20 years ago than they are today. But look, I think most people, most investors and I'll not quote any, but most of them are driven by return on investment still. They want to see money back for the money put in. And that's what drives their thinking. And ESG is in it, of course it is, but how far in, I cannot actually tell you.
Yeah, I think it's a funny one. I think there was a sort of survey done, during COVID, when sort of the energy crisis hit Europe, and it was the question, there's a follow-up. It was actually a follow-up to a survey which happened pre-COVID, and where people had actually said, right, we will pay more for green energy. During this energy crisis that we were experiencing, prices were shooting through the roof. People got a kind of dose of reality of what they vote for and what they'd actually do are two different things. I wonder if the same's is the same case in mining or not. Victor, just to finish on, in terms of the kind of Disneyland pitch to young new investors coming in here, things to look for, things to avoid, just top line.
Absolutely, and I gotta take one of Ian's speeches on that one. Is you gotta look for people who have already done it. Nothing against new people coming in. There's going to be that young, but as long as they're surrounded by people that have already done it, that to me is important. That's having the real good jockey. And most of the people that have already done it will definitely have good projects. So you gotta have to have people that have already done it and good projects. You keep looking at that. You're gonna have to filter through that and find it, not just something that like that looks fancy and dazzy and you wanna buy. That's where people really get hurt. And I think that's where we need to have these. Most of the institutions will look at that. Those are questions that they're asked and they analyze it on their own. So I think that's probably the best advice I can give somebody.
And what to avoid. So that's grade scale and economics. What's the things to avoid? I guess the reverse of what you just said.
The reverse of what you said without that.
Right. Okay.
Yeah.
Makes sense.
I mean, what to avoid, is new fancy, somebody waving and at like when something is deep already in the cycle and they're waving some obscure project that's really, really early. It's not for me. I guess I'm getting to a certain age also that it can be way too early either. And at least I have to have experienced people around there. If it's early, I need to have experienced people around there.
Yeah, we've seen a lot of jumping on the bandwagon, certainly with the lithium cycle, which we've just saw. I suspect we're starting to see it in the uranium. Something a lot about, Ian. And I suspect we're going to see a lot more of that in copper in the coming days. As you say.
Let me add to Victor's comments as well. He's quite right. We use the phrase in the UK in particular, you don't want to be the first taxi off the rank. It's much better to be the second one where you've got the processing tied down, you understand what's happened, how it works, etc., etc. You don't want to be too late, but you certainly don't necessarily want to be the first one because there's a lot of issues that people have to go through. Don't think it's simple. Even gold mining has its own challenges, and that's one of the more simple commodities. And then the second one I personally think is worthwhile considering is, there's a lot of projects that go round and round and round and round. They are not new projects. I prefer new exploration discoveries because they're not contaminated. They don't have history. And all that some people are waiting for is the cycle to say, gold's going up. Let me dust off this little 0.5 gram per ton project sitting here in Ouagadougou or wherever it might be. It doesn't work. You might get your timing's perfect. You might make an investment decision on it, but it ain't necessarily going to be a mine.
Yeah, this is true. Okay, so lots of things to look for, lots of things to avoid. We will try and create a kind of list from that in the article that we do off the back of this. And I'll let you finish off with a 2-minute pitch each on both of your own projects as to why people should be buying your stock. Victor, do you want to go first? 2 minutes.
Sure. We're in a really good jurisdiction. We're in Quebec. Right beside the city of Normetal. If I look at Normetal, there's a town right under it called La Sarre, 20 minutes away. There's an airport there. There's about 12,000 residents. It's a great place to go get a pool of workers. An hour below that, you have the town of Rwanda. Again, another great place to go get a pool of workers. So in the future mine, you don't need to do the fly in, fly out. You will have labor. You will have labor there. You have cheap electricity. You have water. You have roads going. You have roads going right to the project. You're in the middle of the Abitibi Greenstone Belt, so you've got a lot of producers. You have a lot of producers around you. You have a lot of option. There's optionality of what is going to be the future of this project. Are you going to get bought out? Are you going to put this thing into production? Are you going to have a hybrid model? Are you going to send this? Do you start with toll milling first and then doing your own production? Like there's a lot of optionality. You have the price of gold behind you. But I just want to remind people also that I did get involved in this project when gold was at $1,200 an ounce. So there's a lot of profitability. It looks like there's a lot behind there. It's Jacques Trottier was the one who started this company. This is the third mine that is being built. We've been able to finance this company over and over and over to make sure that the drills keep turning and getting the resource higher. And the one thing to look for coming up very shortly is going to be our resource, and immediately after that, our economic study, and also new discoveries as we keep going, because we're still going to be rolling with the 4 to 5 drills from now till the end of 2025, and hopefully beyond that also. That's the best.
I think Victor's only left me 1 minute, but that's all I need, to be honest. The risk we've taken away, there is 4 million ounces. It's there. The definitive feasibility study says we can make an ounce at $1,000 an ounce. So there's choose your number, $1,000 free cash flow per ounce. We are in a relatively stable country. I say that only because the UK is in turmoil. But we are in a relatively stable country. And of course, we have a mineral development agreement, which is a corporate fiscal agreement cast in concrete through the Parliament of Liberia. It gives them terms and conditions to how we build this project and how it operates. That takes away a lot of risk. And you're right, Victor's right. We've got exploration. We've got 400 square kilometers of ground. We've covered 20. There is more to come. We're actually drilling in what we think is a high-grade zone known as Bukenjeda now 10 kilometers away. And we think it's high-grade because the guys are bringing free gold out of it in reasonable quantities at this moment in time. So if we're right and the drills hit, then we have another story to tell as well on top of the 4 million ounces. So look, good time to invest before it takes wind and just disappears too quickly.
Gentlemen, I really thank for your time today. Both companies I like, both CEOs I enjoy talking to. If you haven't had a look yet, folks, do take a look at both of these companies. We'll see you soon, gentlemen. Thank you.
Great. Thank you. Thanks, Ian. Thanks, Matthew.